Hey everyone, welcome back to Small Caps. Here's a guest that you probably haven't seen in a few years. 4 years ago was the last time we had Barry on. I've written it down, August 31st, 2019. Great to have you back, Barry.
Thank you, Philip. Thank you.
Yeah, we've obviously spoken a fair bit at conferences and on email since, but it's been a while since our audience has had a chance to hear your latest views. I definitely enjoy getting your daily emails. They keep me informed. I just thought I'd note, last time we spoke, which was on my couch over in South Bank in Melbourne, if you remember,
Yes.
we the silver price was at $16. Today it's at $28 as we speak, and the gold price was at 1,500. Currently 23.30. Now we were bullish on gold and silver back then, proven to be right. Not to say we get it right every time. How have you found the last few years, and with the price where it's at now? What are your thoughts, Barry?
Well, the past few years have been pretty difficult for people in the small end of the gold and resources stock market. But the gold price itself it's been good. The $8 gold price has been very good, but again, against that, the stocks haven't been performing very well at all until quite recently. So where do we go from here? Now, I've got a near-term target of about 3,300 for gold. And I think over the next 2 or 3 years, we're going to get a number closer to about $7,000. Now, it's not going to go straight up. As I keep saying to people, this is not your father's or even your grandfather's bull market in gold. It's very, very different. It's not associated with raging inflation and we've got lots of geopolitical issues, but it's just not the same. So we've got to ask ourselves what is driving gold. Now, if you can get your mind around that, you've got a better understanding of why the gold price has to go so much higher. Now, as I said, I'm a gold bull. I'm not a gold bug. I'm a US dollar bull and a gold bull. So I'm not waiting for the US dollar to collapse and hyperinflation and all this sort of stuff go on. If you want to see that, go to some of the other countries. And if we look at the currencies at the moment, the US dollar has just started a new leg up. And what we've seen is a breakdown. There's going to be a real currency crisis of sorts. I'm not quite sure how it's going to sort of show up in the markets, but the yen has broken down. And this is really, really significant. There's going to be a big, sharp fall in the yen. But when we look at the European currencies, and here we're talking about the euro, the Swiss franc, and the pound sterling, they've broken up 50-year uptrends against the US dollar. So they're going down, and they've recently just broken down again after certain technical things. Now, they're in fairly important bear markets now. Now, in contrast to that, the A dollar is holding up. And if we look at the A dollar against the euro, and the US dollar would have been pretty good. If you look at the yen, those people who are flying off to Japan for skiing over the next few years are going to find it a really, really cheap place to go. So things are happening. Now, we're looking at the bond markets, and they're really important. Now, in the US at the moment, there's a big fight. Are we going to see the interest rates go down? Are we going to see them go up? I'm on the side of the view that says that bond yields are going down, but that's not that important. We have on the one hand all these massive deficits and funding issues, which should be pushing bond prices down and yields up, but that's not happening at the moment yet. It may. I'm not sure. So we've got to then think about what are the real drivers. Well, the real drivers are essentially in Asia. It's whether it's the people in China buying, or whether it's the People's Bank of China, central bank buying gold, or whether it's the people in India and other parts of Southeast Asia. It'll be interesting if you're off to Thailand tomorrow or tonight. Be interesting to see what people are doing there in Thailand. But really, Asian demand.
It's funny you
And
mentioned that,
sent,
Barry, just to stop you. I was actually in Singapore. As you can see, I don't like spending much time in Melbourne these days. But I was just in Singapore for a few weeks, and I went into one of the bullion stores there. And the amount of activity that was going through that store of people buying, granted, Singapore's obviously a pretty well-to-do nation, but they had a lot of activity, people buying bullion. I don't know if that's standard for over there, but it was just interesting to see because if I go into the stores here in Melbourne, they're pretty much empty most of the time when I go in there.
yeah. Yeah, so gold is not really a Western idea. Most Asian currencies have had terrible experiences. The people in those currencies have had terrible experiences with fiat money. But we're going to see more of those changes. But we are moving steadily towards a gold standard, and a gold standard basically says that you're not going to have career politicians promise you the earth and run budget deficits. Those days are coming to an end. So it's going to be really important. If you don't have the gold, you won't be able to run your deficits. It's just that simple. People just will not accept government debt. So all those things are pushing along. Gold is sort of leading all the commodities, but they're all following. And the reason they're following is all about supply and demand. Basically, the demand is coming out of Asia, whether it's China and India and Southeast Asia, and also the Middle East and Africa. These are really important, large population areas, and so the growth is being maintained. But on the other side, the West is doing its best to inhibit the supply side of anything on the resource sector. Stupidity writ large. And I think in terms of the simpletons who think that Australia cutting its coal-fired power stations to offset climate change, over the last 4 or 5 years, we've managed to cut our coal production and consumption. So we're still exporting. So our domestic consumption has been reduced by 27 million tonnes of coal, and everyone jumped up and down saying that's wonderful. In the meantime, China has increased its consumption of coal by 664 million tonnes. So go figure. So if you believe in Graham's law of diffusion of gases, you know that whatever goes up into the sky in China will essentially be diffused right throughout the world. So it doesn't make sense if they're increasing at 20 times the rate that we're decreasing. It just doesn't make sense. So and China is dependent on coal, and it will not reduce that because it's dependent for seaborne trade in LNG and in oil, and it's very, very vulnerable through the Strait of Malacca and into the South China Sea. So it's not going to it's not going to accept the risk of not having their own energy. So people think they're going to stop growing their coal consumption. They're just silly. They just have no idea. So as I say, they're simpletons. So all those things basically mean that we've got supply-demand issues, and as a result of all that, commodity prices are on their way up. Now, you might recall that in 2020, with the COVID scam, that commodity prices fell sharply, and when they bottomed, the CRB index, Commodity Research Bureau's index, it rose 200% from the low. Now, going from the low to a high, it's easy to go up in large numbers, but it went straight up, and it was a very rapid move, and it was extended for about 18 months. Now, we've had 2 years of correction, and we've broken that downtrend, so we're heading up again. So
it's funny you mentioned that, Barry, just to cut you off. I was literally looking at the commodity index chart before, and I know you and I both love our technical analysis. And let's say it's looking very bullish, the chart, in my opinion, at least. Not financial advice, but yeah, it certainly looks like commodities are headed higher.
They certainly are. And it's all about supply and demand, and there's demand's there and supply's being restricted. And we've got all these other supply chain issues. So And it doesn't matter whether we're talking about agricultural commodities, petroleum, or the metals themselves. So that puts Australia in a great position. That puts our resource sector in a great position. Now, the major exporters of iron ore and coking coal, thermal coal, and LNG, they're doing very, very well for us and keeping the AGI strong. Those stocks are earning great profits, very good earnings, and they're paying good dividends. And the large cap stocks are ready to break out through the 2008 and 2011 highs, and technically it supports much, much higher prices for the BHPs, the Leos, the FMGs, and Woodsides, and all those other big cap stocks. If we look at the gold sector, now today we're around 7,700 on the XGD gold index. Now that's a very, very important technical level. That's a neckline for a big, what we call a head and shoulders reversal pattern. So again, from the low in 2020, we have got quite a number of years of consolidation. We've been doing the right-hand shoulder. We're just breaking through the neckline, and that should take us to about 12,000 on the gold index. Now, the previous high was 9,888. So we're looking at some things happening.
This you're saying the GDXJ or the GDX index?
No, the XGD, which is Australian Gold.
Oh, okay, right, Roger.
ASX Gold Index.
What do you think this is? Because generally with precious metals, you have the stocks of the sector that lead. This time, I agree, we're definitely seeing a breakout. Like, I mean, silver's coming out of a 40-year cup and handle, which is like the most phenomenal pattern I've ever seen in my life, if it plays out. But what do you think this time? It's actually the commodity prices are moving versus the stocks are usually the one that lead the way. And what do you think? Do you think it's going to play catch up now, or do you think it's going to be pullback? What's your thoughts there?
Depends on which subsector you're looking at. Now, it's very interesting that Northern Star, which look, I'm an unabashed long-term fan of Northern Star. It's just a good company once you have Northern Star in their portfolio. But it's just a brilliant company. It's there might be some things that outperform it in terms of percentage terms, in terms of having something which is solid and always be there. It's going to pay an enormous dividend, so everyone should have that. But that's been leading. That's been leading the index because of Newcrest and Newmont merger and all sorts of issues with Newmont and Barrick in North America. That these things have been real underperformers, but the Australian Gold Index with the better quality companies have generally been leading the world in terms of gold. Now, if we see things like West Gold, it's moved up nicely. If this merger goes ahead, that's going to take a bit of digestion because it's quite a fun for West Gold shareholders. They'll have to work that thing through. But Evolution has been underperforming, but I think with copper it'll start to move higher. But anyway, look, these sorts are leading, and then when we look at the smaller ones, they sort of peaked out, and we have had really 3 years of bear market in these stocks. My little index of 12 gold project developers at bottom and is turning up. So all those things are looking very, very good. Now, if you want to take a big picture view on all this, what we are seeing is that the small caps are now starting to outperform the big caps. The big caps are basically led in the terms I've spoken, but the ones are just so cheap. And the commodity prices are so big that the revenues that are being generated and the earnings that are coming through from the producers if we take $3,500 and a typical all-in sustaining cost of $2,000, that's $1,500 margin. So that could be 100 times 1.7 million ounces for Northern Star. It's $3 billion of sort of operating surplus, and that's almost EBIT. And if we go right through the sector, we've got about $13 billion of things up extraordinarily over the last little while. And on an after-tax basis, it's nearly $9 billion. So there's huge earnings coming in these producers. And the producers have got to think in terms of M&A, and I've seen quite a lot of M&A, the bigger earnings. So I think we're going to see a lot of M&A, bigger guys looking at mediums and retail and sorts of other things. So the bottom is in, and there's only one way for it to go, and that's up.
Yeah, no, it's interesting you say that. I was actually just at a lunch earlier. Granted, I'm not dressed in business attire, but it was they were talking about a couple of mergers and acquisitions in the space. Obviously, I can't say much on that, but yeah, it's definitely happening in the space. As people are trying to get in before, I guess, that they assume it's going to take off. Now, we've mentioned gold. Now, I know people love silver. I'm a bit of a silver bug myself, or silver bull, as you'd like to say, instead of a bug. But what do you like in that space, and what are any companies that you
look? There are a number of stocks that are coming through on that are looking very interesting. We're getting sometimes an investigator, but there are now a couple of others that are coming through. We've got a number of silver IPOs coming through, and the other thing.
Quick plug on that one. If people go over to capraise.com, that's our other site, not financial advice, sign up there. We're going to be offering that to investors. So head over to capraise.com. There we go, little ad insert. But that's yeah, I think that one's going to do very well, at least if the silver price holds up. There's been a lot of interest in that one already.
Yeah, and I think that we haven't really been looking for silver. Silver's not, like I should say, there's not a lot of silver in Western Australia, and most of our gold industry is in Western Australia. When we look at what we have in the eastern states, particularly in Queensland and Wales, we've got lots of epithermal deposits which will have silver as well as gold. So keep watching on that, and we're going to see, I think, a bit of action, and that means that there'll be a lot more silver plays out than we'll be able to poke a stick at. But for so long, it's just been really silver mines.
Yeah, I think we've been a long way from seeing that, but it's kind of funny because the prices are moving, but I think the precious metal investors are so beaten down over the years that you hardly there's not that much excitement or out there at the moment. I don't think people believe in this move just yet.
I think you're right. Now, my way of looking at things is a bit of a modified Elliott way, where we talk about that wave one is disbelief, because the mother falls through and not secret. So when the next pullback comes, and I don't know when that will be, and whether it's from here or from higher up, whatever, people will get very, very pessimistic and say, well, that's the end of it. That's the best they can do. But the only time you get pessimism is in a wave two. And wave two's come before wave three. And wave three goes to new highs. So we're sort of in a bit of a disbelief rally moment. People think, oh, I've missed out, but don't want to chase it. But I think that any pullback that comes still be met with pretty much late buyers to high. So, I do think we're going to see that 2,800, 3,300 before we get a significant pullback. And again, I think the Australian Gold Index, with that head and shoulders pattern, is telling you that we'll see a big run, and then we might get a pullback to the breakout line. But that's we'll go with that.
Yeah, I agree.
So silver looks interesting, but look, copper, just chronic structural imbalance, just not enough projects.
That seems to be breaking out in the charts as well, the copper price.
Yeah. It's starting to look good. There's a long-term growth rate of about 3% in copper, and when we start talking about 25 million tonnes of copper consumption each year. Yeah, 3% on that, 750,000 tonnes of additional new capacity every single year.
Yeah,
Hard to keep up with that.
there's a lot
And we're
needed.
seeing it right.
I was going to say, like, there's a lot that's needed, and I mean, it seems like the commodity countries are going to come out pretty good from all this. Like, obviously we should, and Russia.
Oh,
I was just going to mention before we moved on to the other commodities. I don't know if you saw during the week, Zimbabwe, out of all countries, brought out a new gold-backed currency.
yes, yes, yeah, yeah. Look, it's fascinating, these moves. I'm not a Bitcoin fan. I understand why people like it, but and look, we've got a real moment of truth coming up for Bitcoin. It's made really heavy weather trying to get through to making new high again. And I look at Bitcoin versus gold, and it has already broken down. Let's the markets go through that. But coming to these gold issues, we're seeing. I talked about we're going to go to a gold standard, and I think it's going to be a commercial decision, a market-driven decision, rather than some central bankers turning around and saying that we're going to go to a gold standard because these people are the main problem. So yeah, we're seeing a number of US states are now saying that their gold standard type states now, and they recognise gold as legal tender and so on. So that's pretty important in the movement. But coming back to the original comments about currencies, the US dollar ain't the problem. It's the yen. I mean, the yen's got 140% debt to GDP held by the central banks. The European Union's got about 65% debt to GDP, whereas the US has only got 37%. So these are important numbers to look at. And also, when you're looking at the US dollar, you've got to remember that there's a very large capital component of the US dollar. Management instruments, bonds, and whatever could be $100 trillion. But if we look at the trade, I mean, even in oil, you work out 100 million barrels a day, and even if it's $100, that's only $3.6 trillion a year, and not all of the oil in the world is traded. So, if we come back to net 800 or 900 billion, that's chicken feed compared to the capital. So, whatever's happening with BRICS and their trade, and that's fine. That can go over and sit over there. But the big end of town is dealing in bonds and other securities. So you just got to be careful of what you want to focus on.
Yeah, it's interesting. The way I look at, you mentioned like Bitcoin as well. So these, whether it's commodities or these things, it feels like it's a flight to real world assets. I mean, I know I know you're not the biggest fan of Bitcoin, but to me, it's like an anti-fiat trade is the way I'm looking at it.
Yeah, it is. Yep.
Because I'll just make this note. I don't know if people are aware, but the two largest asset managers in China just applied for a spot ETF on Bitcoin, which means they're buying direct on the market. And we're, I think, 10 days away now from the halvening of Bitcoin. So I think that sector's, I mean, it's volatile, but I think long term, whether it's that or commodities, people are going to rush to it for safety, I think.
Yeah, look, now, one of the things we want to talk about is the US election. And that's going to be critical in the bond market, the currency market, and the equity market, and very much at the big end of town. Now,
who have you got winning, Barry, on that one?
Trump has won by a long way. We're seeing a lot of the details on voter fraud that we knew about 3 or 4 years ago. It's just becoming
not the media covers it, but yeah, it's all there if people bother to look, but no one bothers to look. I'm not a Trump fan, by the way, but yeah, no, it's what's going on in the US at the moment is just unbelievable. Well, around the world, and yeah, the media doesn't cover it, so most people just don't know about it, and they just but
it's really quite fascinating because there are certain things which have been underway, and which the evidence is very, very strong. But when you look at all the voter fraud, there's probably at least 20 million and probably a lot more of that of fake ballots last 2020 election. And so if you take 20 million votes out of the Democrats, and you probably picked up at least another 15 going to Trump, it's going to be pretty much a whitewash.
Well, the concern I've got and where I'm bullish on gold, I guess is one of the things I wanted to talk about, not just the US election, but I mean, if we look at the US, but I guess it's everywhere, like people are becoming very polarized, especially in the US. And then on top of that, you've got all these like regional conflicts breaking out around the world, whether it's in Israel, Ukraine, potentially Taiwan. They're doing everything they can to try to get Iran to, do something back. Russia as well, they're trying to get them to provoke them. So there's a saying that we've actually got an interview coming up with Gerald Celente again, so he's coming back. But one of his sayings is, when all else fails, they take you to war. And that's my biggest concern, is that they're basically doing everything they can to start a war. I mean, and I hope they don't get away with it, but I mean, seems like that's what the push is.
I don't think they will, because the White Hats, as they say, I think have got a lot of these things under control. But you've got to keep in mind that most of Europe and also the US have used up most of their weapons.
That's true.
In the Ukraine war, most of the ammunition. Look, I guess we've talked a long time about all this, but I think the strength of the US dollar and gold is, and I think of gold as a matter of prosperity, not a crisis. It helps me understand it a lot better than gold prices going up because the end of the world's happening. That's not, in my view, happening at all. It's exactly the opposite. So, look, I think this is going to be peak anxiety for all the world going into the end of this year before the US election. But I think afterwards, there's just so much of the criminal element in North America will be removed via the ballot box. A lot of those people, doesn't matter whether they're Republican or Democrat, have been selected rather than elected. They won't get there this time because they just will not be able to manipulate the voting. But that's just a comment.
Well, politics aside, how do you see the with interest rates? I mean, we've got inflation. Looks like it's about to pick up again. They keep talking about how they're eventually going to lower rates, but how do you see, like I'm viewing out and going, how are they going to lower rates if inflation starts picking up again? Like they're kind of in a bit trapped there.
Yeah, look, there are different forces. The commodities are moving up because of supply and demand, not because of, it sounds crazy, but the rampant money expansion that we've seen in the past. And there's still strongly deflationary forces out there, which is why the bond yields haven't raced away. And again, I'm leaning to them coming down, but if they go up, well, we've got different issues. But I do think come 2025, when there'll probably be very substantial cuts in expenditures because some of the infrastructure bills and whatever are giving you really big deficits. So if they get cut, it changes things. But if we go into 2025 and think of one of the main driving things is in the US is going to be housing. Now, housing, they need about 1.5 million units a year. And since the GFC, which was really all about subprime housing, there's still about 7 million units short. And there's been massive immigration into the United States. There's been massive migration out of California and New York into other parts of the US. So housing construction is still running. And I think there's still massive infrastructure. I mean, real infrastructure not just social services, which is those big infrastructure deals we're all about. So there are changes, and you still have to think that America is the driver in terms of economic activity. Interesting, the Chinese stock market had a big sell-off early this year, and I think it marked the end of the 15-year bear market. Now, you might not think of the Shanghai market being a 15-year bear market, but it has been. It peaked in 2007, and it's basically been having lower highs all the way through. So, but I think that we might have finished that downtrend, and I think we might see the Chinese stock market start to perform again. And we've got India, which is just growing. It's rocketing up. It's now the second largest producer of crude steel. It's gone right past Japan. We're talking about over 140 million tonnes. China is still up near 1 billion, so it's got a long way to catch up, but it's growing. So that plus there's a lot of steel production in the Middle East using gas, and in terms of direct production and HBI type products. So that's going to keep the steel side going, and that's going to keep the demand for copper and so on, and all those other commodities, and particularly energy. Now, the biggest market in the world is really energy, oil and coal and gas and everything else, nuclear, and that just will continue to grow, particularly with China, India, and Africa.
Well, I wanted to ask you about that actually. Uranium, uranium, talking about coming out of a long base, that's been consolidating for almost a decade now, and it seems to be coming out of it. But those countries you just mentioned, like China and India, sure, they're using coal and all this, but they're also at the same time, I think China and India are each building 150 nuclear reactors. So they're going full nuclear. I know it's not big here in Australia. We can't even mine it in WA. We export all of it and that sort of thing. But it seems like these countries, because people don't realize AI and these things that are coming, they are so energy rich. This whole thing about renewables is not going to cut it. It's not, maybe one day, someday, but the baseload power that you need, reliability, you just can't get it from your renewables right now. And nuclear is the cleanest, cheapest option that we've got, that I know of at least.
Yeah, absolutely right. Yeah, so look, it's the numbers just speak for themselves, and we just have a very, very tight market for uranium. The spot market is not quite the same as the contract market. So the spot market can get well ahead of itself, and it has, and it's pulled back. But it'll base out, and uranium will move up again. And the uranium sector, I think, looks very, very robust going forward for quite some years.
Yeah, it's interesting. Just on that, with whether it's gold stocks or uranium stocks, and I know they get diluted over time, but given where the commodity price is at and where the share price is at, it's a massive disconnect from what I can see. So there's going to be a big catch up potentially playing out there. But with that, Barry, I just want to leave on one note before we catch up again next time. Let's get some price predictions out of you. I won't hold you to them, but where do you see, or what do you, rather than picking a date, what do you think the high for gold and silver will hit this year?
This year, look, I'll go for 2,800. My 3,300 might be a bit further out. $7,000 will be comfortably behind, further out from that. I think with silver, now that we've gone through $26, $27, I think we'll get to $40 very quickly. So I think we will actually see $50 this year.
Yeah, I agree. I think we're probably going to go to high 40s, but that's just between us throwing darts at a board. So it doesn't mean anything. Don't invest on our advice, guys. But Barry, thanks so much for dropping by and updating our audience on your thoughts on what's happening. Where can people stay up to date with you?
Oh, look, I put out an irregular newsletter called Dawes Points. Dawes Point being the southern approaches to the Upper Bridge. And I hope to make that a little more regular. That is generally sort of strategic issues and big thoughts about energy and currency and so on. And if people would like to make some real money, which I think
they do.
To do, just get in touch with me at bdawes@mpsecurities.com.au. 02 922 9111. So it's going to be a pretty exciting ride, and for the most part, a lot of people have forgotten what investing in the resource sector is all about. They've forgotten about a lot of the companies, and companies change. So there's a big learning curve, and you've got to keep in mind that the peaks in market only come when everyone's really optimistic, and the market has broadened enormously from not just the gold price, the gold bullion, the gold stocks, and the activity in the sector and exploration and demand for people and so on. The whole economy in that sector grows substantially, but the demand for knowledge and the knowledge of the data that becomes available just mushrooms, and so everyone's basically going to be catching up with this extraordinary growth in knowledge in the sector, and with the internet, which we really haven't happened in quite the same way in social media from previous times, and as you say, AI and all sorts of other things, other technologies. There's more and more ways of looking at it.
Yeah, we just did an article today. People can check out on BHP how they're about to become the #1 copper producer, and a big part of that is using AI in their recoveries. So there's a lot happening in the space. But next time we get you on, Barry, I wanted to really get a broad overview, because gold and silver is running hot. I know that's you've been a bull in that space, and your charts have been predicting it. So I thought you're the right person to get on. Next time we get you on, maybe we'll go a bit more stock specific, what people should look for in particular stocks, and drill down a little bit to educate the audience and help them through what looks like could be a potentially decade-long commodity bull cycle.
Absolutely right. Yeah, but people just need to keep in mind they need some big stocks, some middle-sized stocks, and some little ones. Don't stick with all the little ones, because you'll come unstuck. You'll be amazed how high BHP will go. And I'm sure at the top of the market, people are going to think about every pound of uranium that BHP has to lick it down, even though never really be mined. But that's what makes bull markets.
Awesome. All right. Thanks so much for your time, Barry.
Thank you.
Likewise. Cheers. See ya.